If you're a day trader, this video is probably going to be a very hot take. All right. It's going to be a hot take. I'm sorry. I'm going to talk about something that I think a lot of day traders might actually disagree with me with. However, it's just my personal opinion. If people disagree with me, they disagree with me. But this is going to be a controversial topic that I'm going to talk about because I feel that a lot of people, or I should say a lot of day traders, get trapped into this and start focusing too much on this one thing. And I'm just going to talk about it. Leave your thoughts down in the comments. Let me know what you guys think about this down in the comments below. I read all the comments, so just yeah, let me know what you guys think. But before we get into the video, be sure to smash the like button and subscribe to the YouTube channel to get more daily content. Let's go ahead and get into it. It's time for a hot take. I'm sorry, but indicators do not work as well as you think they do. They are not needed. Day traders do not need indicators, and I'm gonna tell you exactly why I think that day traders don't need indicators. And for one, indicators are lagging. They are lagging indicators, meaning price has to move in order for the indicator to move. So when the indicator tells you something, the price has already happened. So when you have lagging indicators, you're already a little bit behind price. And when you start heavily relying on indicators, you're simply implying that price moves price, and price does not move price. Volume moves price. So when you're sitting there staring at an indicator, you're basically staring at what's already happened. Now, there are some indicators that aren't lagging, all right? There are some, but majority, if not 90% of indicators are all lagging indicators. So you're just 2 steps behind the market already if you're paying attention to those heavily. You should never rely on indicators to make trading decisions. You should always use price action, volume, and key levels to make your decisions and what price is doing at those key levels. Again, volume moves price. Wherever there's the most volume being conducted, that's going to move the price, whether that's a supply zone or a demand zone. Those are the levels you should be paying attention to, not what the freaking, moving average, the 30 EMA, the 15-second, 38-year moving average, whatever. You don't need to pay attention to those. They're all lagging indicators. You need to pay attention to what's happening right now. Where is the most volume being conducted? What are these key levels that the most volume are being conducted at? And pay attention to that and then see how price reacts. Always react to price. Don't react to indicators that's already happened. If you just focus on the fundamentals and price action and volume, you're going to be a successful day trader. If you study those 3 things, the fundamentals, price action, volume, those 3 things are going to make you a profitable trader. You don't need an indicator telling you to go make this trade because this trade's probably already happened, especially if you're one of those traders that hesitate before you make the trade. Again, this is just a hot take. Y'all do whatever y'all want to do. This is just me personally. This is my personal opinion. I do want you guys to leave your thoughts down in the comments because, again, I want your take on this, but I felt the need to make this video because I see so many day traders have all of these indicators on their charts, all these moving averages, the EMAs, the SMAs, the whatevers, right? The RSIs. I see so many. Okay. And now don't get me wrong. I do use a couple of things like cumulative delta. Okay. I use cumulative delta, but does it make me make my trading decisions? No. It just tells me what strength there is in the market. It's not telling me what price or what moving average is here and where price is going to go. All right. I don't rely on those type of indicators. I only use cumulative delta to show me strength of who's more in control, buyers or sellers. That's it. All right. That's the only indicator I use outside of VWAP. Let me clarify, right? Before I start to get bashed, VWAP is another indicator that I use, right? It just shows me the volume weighted price on the day. All right. Do I use it to make trading decisions? No. It just shows me where the average price is on the day and where volume might be conducted. But VWAP is heavily respected, right? The VWAP indicator is heavily respected, especially by institutions. So when you're using all these moving averages, right, all you really need is VWAP. All you need is one indicator if you're going to use indicator, and that's VWAP. In my opinion, again, don't come at me, bro. All right, don't come at me. It's just my personal opinion. But you know what? You guys do whatever y'all want to do because y'all are in the trading seat. Y'all do what's best for you and what works for you. And we'll do what's best and what works best for me. All right, it's just that simple. But I just wanted to give my personal opinion. It is a hot take. I'm sorry if I offended you, but I just wanted to give my personal opinion. If you guys like this kind of content, be sure to smash the like button down below. Subscribe to the YouTube channel to get more daily content, and I will see you in the next video. Cheers.